But let's also continue with our corporate conversations. Now, we're focusing on GIC Re. The company's FY23 performance did improve as the underwriting losses have declined. However, the question is on growth and growth in premiums and what the current year can throw up for this company. We have Mr. Srivastava, Chairman and Managing Director at GIC Re now joining in. Good morning, sir, and good to have you on the show. So FY23 was very interesting. If we look at the underwriting losses, then they've improved dramatically. I think they've halved, if I see the right numbers, to just about 2,200 crores. But the market wants to know, what about premium growth? Because for the year as a whole, your gross premiums were, I think, down somewhere around, in the mid-teens. Can you reverse that decline in premiums this year? And if yes, then which sector do you think can fire for you? Motor, fire, which is that sector where you see growth coming in?
See, the trade of reinsurance is one that is extremely balanced, and we have very calibrated measures in whatever we do. So what you see is happening today is not that it happened overnight due to our assiduous efforts over the last 3 years, and that is how the trend is now visible in what we are trying to do. The commitment was that we will try to bring down our combined ratio, which is essentially translates into improving our incurred claims losses, which is what has happened. In the process, you had to prune your portfolio. There was a lot of baggage that GIC was carrying, which we shared. And the pruning of the portfolio and making the underlying portfolio healthier is what translated into this improvement that you are seeing visible in figures today. Now, as far as premium growth goes, for a reinsurer, growth in premium is never a problem. You want me to double it in the next 6 months, we will do it. But with doubling of the premium will come tripling of the losses. A reinsurer does not want it. It is very easy for a reinsurer to do that, but then the losses is what a reinsurer should be mindful of. Exactly the part that we have chosen to tread on, and that is getting the bonus to us. Now, as far as the growth is concerned, we have seen an amazing hardening of the market by almost 25 to 30, 40, 50 risk-adjusted rate changes that have occurred in the market. And these rates have really proved to be, giving us the tailwinds necessary for having now achieving growth with profitability. That is what our endeavor is going to be in future, and that is the way GIC Re is going to move forward as a national reinsurer.
Mr. Srivastava, good morning. No specific numbers then, right? The momentum for you will depend on how the underlying insurance industry does. Would you want to put any numbers to it in terms of premium growth for 24?
No, not really. We wouldn't really want to put a premium growth because growth is important, no doubt. But then the underlying profitability of the portfolio for a reinsurer that gets you balance is more important.
Got it.
Okay,
now,
Prashant, can I just ask about the other end of the spectrum? So you're not giving us a premium growth number, but the fact that you're on a very consistent path of reducing those losses, which have halved. You're at 2,200 crores of underwriting losses in FY23. What happens in FY24? How much lower do you think you can bring them to?
The reinsurer's worth really is measured by the combined ratio. Combined ratio essentially is in what you earn to what you spend. Currently, we are at 109. So put very simply, for every 100 rupees of premium that we are getting into our kitty, we are spending 109 by way of claims and commissions and expenses of management. Expenses of management is never a problem for GIC because at 1%, we are possibly the lowest in the world. That leaves your claims, what is to be, tightened up. We are at 109 today. The idea is to get to 104 and then finally to be as close to 100 as possible. So that should give you a fair measure as to where we are moving.
Mr. Srivastava, thank you so much for joining us. What I wanted to understand also, you spoke about combined ratio at 109. Could you give us a bifurcation in terms of what's the combined ratio on the international side of the business and what's on domestic side of the business?
Right. So if you see the split that we have between our international and our domestic book, and first, why a split at all? Because the basic tenet of reinsurance is spread. I mean, very simply put, that your premiums from America will offset your losses from Australia. That's how a reinsurer balances his book. So our ultimate goal is to have a 50-50 book, 50 domestic, 50 foreign. Currently, we are at 70-30, which is where we stood at 31st of March 2023. But now when you look at how we have tackled the domestic book, which was easier and being home turf, we were absolutely sure as to what we are doing. the combined for the domestic book is standing at 95, which is extremely heartening. So where are the 109 figure coming from? Are from our foreign book, which is what we are going to now pay a lot of attention to and have growth there with profitability as the mainstay. The fact that the rates have hardened, as I mentioned earlier, is going to help us a great deal in achieving this objective.
Just a follow-up question. You said that you'll be focusing on the international book. The combined ratio there is about upwards of 130. Now, of course, we've seen a hardening environment across the globe, including the foreign markets. With this hardening to continue or remain where it is and everything else remaining the same, in this current financial year, could you see a 25 to 30% drop as far as the combined ratio is concerned on the international book? Is that possible?
Exactly what we are working at. We are calibrating our entire efforts on the international book, and we'll be, again, shedding those portfolios, those treaties that we have which are loss-making and, trying to make the underlying portfolio a much healthier one. That is the endeavor for GIC Re.
Okay, one question as far as the price hardening itself is concerned, like domestic insurers have been complaining about this very aspect of price hardening. What's your outlook for the April cycle? Do you expect it to remain where it is, or do you expect it to harden further?
See, reinsurance is a very cross-border trade. So whatever happens is not, India is not insulated to the globe. It's a global phenomenon that we are witnessing, and this hardening, the experts say, is going to continue for at least a couple of years more. So you would be expecting some rate hardening in the next April cycle as well. That is something that is going to flow in.
Okay, thank you so much, sir, for speaking to us and sharing your views as far as the company's performance is concerned. Back to you guys.
Well, Yash, thanks very much for that. And Mr. Srivastava, thank you very much for taking those questions. Appreciate you joining us with that. I mean, we don't hear from GIC Re very often.